All right, everybody, how is it going? So today's date is July the 14th. It is a Sunday. It's about 11 p.m. Central Standard Time here in Manitoba, Canada. As you guys can see, I have a guest star for the next few weeks. I'll be taking care of Luna. Do you guys remember her? If you guys have never met my dog Luna, she's probably the best and the smartest crypto dog ever. She owns the majority of shares for the majority of coins for Dogecoin. Dogecoin! Who remembers that? Luna, how many Dogecoin do you have, huh? I carry about 9 million of them. Luna, is that really true? You don't even speak. Dogs don't speak. Anyways, so she's going to be guest starring on the show quite a bit, and the majority of the technical analysis will be performed by her. Yeah, girls gone wild! Dogs gone wild! Dogs gone wild! Okay, guys, I just want to give you guys a quick hello, because you guys are always thinking that Luna's not alive anymore, right? But she's doing incredibly well, I assure you. All right, let's get into this technical analysis, guys. So today's topic is going to be this, okay? I apologize for being away for a little bit, but you know what? I'm more so focusing on the big positions. And the big positions are definitely coming up right now. So I'm going to give you guys an idea of what is on my mind thus far before we get into this, okay? So first of all, EOS is on my mind. For the people that are not familiar with the way Fibonacci retracements work, let me give you guys an example, okay? So Fibonacci retracement uses the Fibonacci sequence set of numbers. As you guys know, it starts from like 1, 3, I don't even know it off the top of my head, like 8, 13, 21, 55, and many more. I specifically use the 8, the 13, the 21, and the 55. And as my T line for the EMA, I use 200. So what traders are always looking for is this right here. They're looking to capitalize on the golden ratio. When a wave goes upwards and then it makes a major correction downwards to the 618 Fibonacci region. We also call this the golden pocket. That's found between the 618 and the 0.65 Fibonacci region. And the golden pocket is a region slightly below this golden ratio that simply just catches it. And it's really good. Sometimes you can catch like a nice wick in there, right? And if you can actually catch this wick in there, beautiful. Now, it doesn't guarantee that you're always going to be in a successful trade. But what I can say is that over time, guys, you'll be much more successful adopting this strategy over time, as you've seen me employ it many times in the past before. And if you keep a general statistic of it, where you're only taking 618 Fibonacci trades, you're actually going to be profitable, I'm guessing, anywhere from 60 to 80%, depending on many other confluent factors as well. So, going really quickly to EOS here, what we can clearly see is that this right now is specifically in between the golden pocket range. So just giving you guys a quick idea of my general thoughts of what I would personally like to be swinging for the next short while. So now we take a look at, first of all, let's take a look at the monthly. Now that we're about halfway there, living on a prayer. That's pretty much what we're living on right now, guys, if you got the gist from my amazing singing there. Guys, right now, I think the bulls are pretty much living on a prayer, okay? Because right now, halfway done the week, guys, and you guys know what this candle is called? It is called a shooting star candle, okay? Where we're getting a slight body on the bottom end, and then we get a huge wick that shows to the top. Now, a green one is not nearly as bearish, but if you look at a red one, it is the more bearish of the two, obviously, right? It's kind of like an inverted hammer, right? An inverted hammer is found on the bottom of a downtrend, and this will signal pretty much an uptrend that's imminent to start, or the bears have slightly lost control. But you can also see inverted hammers at the top as well. That might imply that the bulls are losing steam. But if you see a shooting star, as we are seeing right now, with 2 weeks of straight rejection, somewhere between 13K or 13.3 and 13.6K. So we're seeing some pretty strong rejections there. So let's take a look at the weekly chart now, okay? The weekly chart is something we really want to be interested in because it just actually closed. And what you see with this is pretty much a bearishly engulfing candle, you can say. Well, okay. First of all, let's clarify the definition of the bearishly engulfing candle. Okay, so it can be seen in many different ways, but the way that I see it is basically a candle for the next week. It's really hot today, so I apologize if you guys see me doing this because my hair is getting very humid today. So a bearishly engulfing candle, generally speaking, is a candle where you're getting a larger body on the next day that engulfs the previous day's candle or the previous candle in general. So this one here, I would certainly say that the high, the open of this one was 10,800, and then the open of this one here was actually, where is this one right here? 11,485. Actually, this one, the close was 11,485. So remember that, 485, and this one was 485. So it started out the same open and the close, actually, right? Or it closed the same as it opened, rather. But you notice how this one is pretty much bearishly engulfing it, you can say, despite it opening and closing at the same time, an interval. To me, that's okay. I would consider that a bearishly engulfing candle. And the majority of it was actually sell volume, okay? So now we're wondering to be left with is like, okay, well, if this was the first bull run, why did the RSI be so weak, right? We can't even get over 81 RSI. And if you remember me talking about it last week, we were talking about how if this week's candle and RSI would actually be larger, right? If it would actually be larger, or sorry, greater than the previous week's. And the answer is absolutely no. Okay. And then, sorry, completely lost my train of thought. Sometimes I think of really weird things that are off on a tangent right now because I'm technically on vacation mode for a very, very long time, okay? So now let's go to the 3-day, okay? The 3-day actually ended up crossing over already. The MACD and the histogram, which I've been waiting for, and I'm not really a fan of that, okay? Now, let me explain to you guys something. How this is called, we're gonna basically call this, like, actually, no, never mind. It's not a hidden, I was thinking it was a hidden bearish divergence, but it's actually not. But anyways, if you take a look at this candle here, right? We're getting basically a bearishly spinning top candle. That does not look good whatsoever. That was the past 3 days. And then this 3-day actually just closed. And that's a really nasty candle, right? So we're finding this support down to the 97.30 regions right now. If you look on the 2-day, it's actually really nasty as well, okay? Like the reason why it's really ugly is because if you actually compare these two specific points right now, and let me give you guys my hypothesis, okay? So if you look at these 2 points, they're roughly the same, right? Despite the wick. But if you look at the RSI, when you're comparing it right here to right there, that is a very nasty RSI where you're getting a much lower low despite the same similar type of price around that range. So now if you look at the 12-hour as well, actually, first of all, let's clarify, first of all, that we are at the 55 moving average, okay? 55 moving average for the daily. That's, in my opinion, going to hold for a very short while, okay? But the 12-hour, I want to be very clear that we are well below the 55 EMA now, okay? Now let's just go down the time frames and see how we're looking. If you look at the 6-hour, this is by far my favorite chart right now that will show some sign of bullishness for the very short time frame. Now, we always gauge it like this. Let me show you guys how to do it, okay? We say to ourselves, all right, well, the 1-hour chart passed down well below the 55 and the 200 EMA. What is the 2-hour doing? Crap. The 2-hour chart is actually doing a death cross already. 3 hours is about to death cross, right? Well below the 55 and the 200 EMA. And now we're going to basically move down the charts until we see a very relevant exponential moving average, whether it is the 55 or the 200. As you can see, we're getting closer to there. So we say to ourselves, the 4-hour is trending well below the 200 and the 55. What about the 5-hour? Wow, the 5-hour is trending slightly below it. And then we go back a little bit and we ask ourselves, are we finding any volume whatsoever that actually can indicate a short-term reversal? And the answer is, bam, possibly this father right here, okay? You guys see this hammer candle with that volume? Pretty decent if you ask me. Not only that, the RSI is trending incredibly low already, and the curvature is starting to look like it could possibly come around. But don't get me wrong, guys, I'm still in full bear mode, right? I'm talking about medium to longer term, as in 1 month to 3 months. I think that we are in definitely a bear market right now still, and hasn't confirmed much. In fact, we might even see some numbers from my longer term analysis that you guys are probably not going to want to hear. But for now, I see short-term support from this 4-hour, hammer that form. 5-hour, 1 hour left. It's actually going to form probably the sickest doji that I've ever seen. That means that if we are trending slightly below the 200 exponential moving average on the 5-hour, by deduction, the 6-hour must hold true to the 200. Is that holding true? And bam! What we see is 2 hours left, okay? 2 hours left on this closing of this candle for the 6-hour chart. And then what we see is a beautiful hammer candle that is forming thus far with a huge rejection from 9,888 by 3.1%. As you can see that the bulls were very interested around that region. Now, let's just keep moving down and see on a shorter time frame, right? We're seeing these guys just kind of hover very low, but we are seeing a higher high RSI, right? Sort of higher low. Because when you can compare that one to that one, you see this one is a higher low, but what do you see for the price here? You see lower lows, right? But you're seeing a lot of volume starting to pick up. So take a look at this 1 hour chart right here. Do you see this yellow or this orange line down here? Okay, this orange line right here is called the moving average for the volume, and it's an indication of how volume is actually trending. And you can see it getting upwards, right? You can see the initial downsell of how big institutions or large retail investors who have millions and millions to play the game. I see this as creating panic in the market. Because let's think about the psychological emotions that drive us. It is fear, it is greed, and those are the two main components. If you can overcome that, you can overcome people in the game, right? So sometimes when I see large seller volume right here, think of it like this. Okay, let's get into some high play analysis and how we leverage to create fear and panic in the market. How we treat Bitcoin as a finite resource, where I'm gonna try to force you to sell your Bitcoin to me. Because this is not a limited amount, right? This is a comparison to gold, where things will run out eventually all the time. And when they actually do run out, that's Luna. Luna, you hear a car coming? Luna, oh, oh! Luna, oh, oh! Quiet, Luna, that's enough.
Luna.
She's not used to it yet. Liz, can you take her? Can you encourage her? she's not used to noise yet. My dog and my lady just met for the first time today, and they seem to be liking each other quite a bit. So I'm pretty happy about that. If my dog didn't like her, I would have had to break up with her. I would have probably had to ask her to leave my parents' place. You know, it's just that simple. Don't worry, she gets my sense of humor, guys. Okay, let's talk about some high-level play now. Sorry to get off on a tangent. Let's just say I'm trying to force you to sell your Bitcoin. What would I do when it's near the bottom? I'm going to create a lot of panic in the market and create a lot of fear, right? Fear. So when you think that it's going to be driven down more, what a player, let's just say I had $10 million, right? And I'm not spoofing the market. I just want to be really clear. And this is just a disclaimer to myself that spoofing is completely illegal in traditional equities and any other market in the world, okay? Completely illegal, but I'm not spoofing, because if I had $10 million to play in the market and I could leverage up to $33 million, I would have every intention. I'm just saying this as a disclaimer in case someone is trying to, do something. So what I would do is I would actually create a wall that, there's the bid and then there's the ask, right? The people who are bidding are the ones that are trying to buy, and then the people who are asking are the ones selling, right? I would create a $30 million wall of Bitcoin right there, right? Right up there, just to make it seem like it's not passable. And then you would slowly drive down the price lower and lower and lower and lower and lower. And then it would force someone maybe like you, who might not be that experienced in the market, not to say that you are or are not, but that's how you create fear. You see this immovable wall, right? It's like an unstoppable force meets an immovable object, right? You can't move that thing. It's just too big, no matter what you try to do. So then you're going to create fear. You're going to think to yourself, oh my God, this is, or my goodness, sorry, this is not going to go up any further. So I'm just going to sell. And then you know what you're actually doing? You're selling to, for example, a guy like me, who's just gonna buy it up, right? Thanks for providing the liquidity, you know, like no problem at all. Really appreciate you providing that liquidity. It's a very finite resource. Thank you from transferring. Excuse me, I'm just gonna put this on the side a little bit better. Thank you for transferring, you know, the wealth or money from the rich to the wealthy, right? That's just kind of a traditional money exchange. So then now all of a sudden you've sold all of your, you know, it's already really low, and then the price ends up spiking up after, right? And then you get this inverted bullish pin bar, and then you get this hammer candle as well, and then Bitcoin ends up recovering 4%. Now imagine, I'm sorry guys, imagine how other alts were affected. When Bitcoin moves 4%, every other coin will move by a proportional amount multiplied by a factor. So some coins will move that Bitcoin of 4% multiplied by 2. So that could be moving 8%. So you can just imagine this tiny little bit of driving force that made this coin go up right here. So now guys, I'm going to talk about the bearish side, okay? I'm going to talk about the bearish side, guys, and you are not going to like this at all, okay? First of all, the first sign of support is the 55 moving average here. I do not think that this is going to hold, but I do think it's going to hold for now. Okay, so let's be really clear, okay? So I personally believe that this would be the most ideal thing to happen. I don't think we're going to make, guys, I'm going to repeat, I do not think we're going to make a descending triangle. And the reason why I don't think we're going to make a descending triangle is because of the 6 hour. We're bouncing off of this 2 hour moving average, the 200 moving average with a lot of conviction and volume. Not only that, it's already penetrating this daily chart as well. And the daily is already starting to form a hammer, and it's looking great all across the board. So therefore, what I would love to see is this, okay? My favorite patterns to play is not a descending triangle or an ascending triangle. Now let's go over these triangles for the people that are new to my channel, okay? There are descending triangles, right? Where they just keep hammering down, okay? They keep hammering down, 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 down. Eventually they break down, but they don't always break down, okay? Sometimes they break down just a little bit, and then you got trapped, and then it goes up. So that's one way to look at it. And then there's the ascending triangle where it just starts hammering it upwards, right? Until it tries to crack it, but it doesn't always go up. Many cases where it breaks down. And then there's the symmetrical triangle. The symmetric triangle, there's force, there's push, and there's pull on both ways. Supply eventually ends up meeting demand, right? Liquidity both ways, buyers and sellers, bears and bulls, they both want control. Everybody's got this tug of war that's going on. We don't know who's going to win. But what we do know is that there is tension going on both sides, okay? And when there's tension on both sides, one side always wins. That is the laws of the market. And now, if we can actually get into this type of symmetric triangle, this is most likely, in my opinion, going to break down. And where would the first support be? If I were true in my hypothesis, well, the first mode of support, unfortunately, will be anywhere, in my opinion, between 9,400 at first, okay? 9,400 literally to about $8,000. I know it's a really wide range right now, but guys, I can't make a prediction. Actually, I gotta be more realistic, okay? My range is more like 8,000 to 8,800 about for now. That's a pretty scary thought, okay? But the first level of support, I truly think it'll be somewhere between here. It'll be anywhere between 9,300 to 9,800. So I'm giving you the bearish view right now, okay? The bearish view is that, guys, we break below here, we find some temporary support between 9,300 and 9,800, around there, okay? 93 to 9,800. And then the second range of support is between 8,100 about and about 9K, we'll say, okay? So that's the bearish view. The bullish view is this. The bullish view is that we could possibly make this type of symmetric triangle based on how things are looking so far. There's absolutely a possibility. And if this were to happen, one of two things is going to happen at the apex, okay? The apex is where the push meets the pull, where the bears meet the bulls, okay? And one of two things is going to happen. It's either going to go down or it's going to go up. Now, don't be a newbie, okay? Don't say stupid things in my channel. I don't like that kind of shit. You guys know I'm one of the most real people you'll meet when it comes to trading and being transparent. Yes, it's going to go up or it's going to go down. Ah, bravo, you guys get a 9th place trophy for that, okay? Of course the market's going to go up or down, but it's not about knowing if it goes up or down. It's about having more of a specific reason to lean one way than the other. You got to weigh this on a balance of beam, right? Which way it's going to go. And then once you've maybe confirmed to yourself and you're sticking true to your own hypothesis, which way it's going to go, well, you also have to have a backup plan in case it goes the other way. I used to be a bad trader 3 years ago, and I used to say to myself, all right, well, you know what? I know it's going to go this way. I'm not even going to do anything about it. And then after that, what ends up happening? It's okay, Luna. You can be yourself. You want to come sit on Dad? Yeah, you want to come sit with me? Come here. All right. She's going to come sit with me, guys. Nothing but a cute little dog that weighs 6 pounds in your lap. You want to say hi to the camera, Luna? She's really, really precious. Girls gone wild! Taking off my shirt. Girls gone wild! Yeah, look at me! Everybody buy BitConnect! Buy BitConnect! Luna, don't ever tell people to buy BitConnect, okay? That was really bad. You're gonna be put on the sofa now, okay? Guys, don't listen to her. Don't buy BitConnect, okay? So guys, one of these two things is gonna happen, right? You always have to have a backup plan, because when I was first starting the trade, I was so confident that I was going to lean one way that I didn't know what to do when it went the other way. So this is kind of how I evaluate it now. I'm always going to have a backup plan for if something doesn't happen, or if something does happen, especially as well. And that's what risk to reward is for, especially, right? So once again, guys, my support range is right around here. And the reason I'm using this is because I'm using the low of here and the high of here to generate my support range, which is about 9,750 to 9,341. And then here, I'm using the high of this range to pretty much the high of this range over there, right? Around the 8150 ranges to about 8950. So that's what's going to happen if we end up breaking downwards, right? These are to my two hard supports. And we're also going to combine it with a lot of things like RSI, especially as well. And then when you also look at the upside, guys, I can't even think of the upside yet, because obviously the clear resistance is going to be between 13.3K or 13.2K and 13.7K about. So other than that, you guys have both my bearish and my bullish views. You guys have my play for EOS and kind of my plans as well of what's interesting me. You guys know where the supports are and the resistances are. We've done a detailed analysis on the monthly, on the weekly, on the 3-day, the 2-day, the 1-day as well. We've checked out MACD and RSI on almost every single time frame. If you guys have any questions, please make sure you comment below, because I really want to get back into trading with you guys. I got a lot more time on my hands now. And also, guys, don't forget, all right? You guys, I'm going to retweet this right here, okay? You guys need to check this stuff out. If you guys are still interested in my course, I highly suggest that you guys get on the ball, okay? Because this is only going to go on probably for another, I'm guessing till the end of July, and that's it, okay? So you guys know exactly what my courses sell for. They sell for about 200 each. Just buy all 3 of them, honestly, for 240. It's a way better deal. And this is kind of like a once-in-a-lifetime kind of deal where you guys are not going to spend $5,000 on a decent course. You guys all know that my courses are pretty decent in terms of helping you. I answer as many questions as I can as well on Twitter. Best way to get a hold of me. So if you guys are still interested in my course, I highly suggest that you send me a DM or just scroll back a few tweets, and let's get this crypto going, guys, so you guys can get trained for the next bull run and know exactly what to do. So thank you very much for tuning in. I appreciate all the love and the tremendous support that you have always shown me, and I hope I could reciprocate it as much as you've shown me that one day. So have yourselves a great night, and thank you for tuning in for this July 14th, Sunday, technical analysis for Bitcoin. Good night, everybody. Bye now.